Staying on top of cybersecurity news, it can feel like a constant uphill battle, right? I mean, new threats, new solutions. It's just a lot to process.
It really is. Yeah, the sheer volume of information can be pretty overwhelming sometimes.
So today, we're going to try and cut through some of that noise.
Exactly. What we want to do is, pull out the really crucial insights, the things that give you a real understanding of what's actually happening in this field because it moves so fast.
And for that, we're diving deep into a cybersecurity giant, Palo Alto Networks, specifically their fiscal Q3 2025 financial results. They just came out May 20th.
Right. We've got the official earnings release and also their earnings presentation deck. Those are our main sources.
Lots of data in there.
Oh, yeah, packed with it. But our mission here is basically to synthesize it all, give you a clear, concise picture of how they're doing and, where they seem to be headed.
Think of it as your express route to getting up to speed. We'll unpack the key numbers, look at their strategies, connect the dots, help you grasp the big picture.
Sounds like a plan.
Okay, so let's get into it. Starting with those headline figures from Q3 of their fiscal year 2025. What did we see?
Well, in Q3 25, Palo Alto Networks showed pretty solid growth. Revenue was up 15% year over year.
15%, okay.
Yeah, reaching $2.3 billion. That's compared to $2.0 billion same time last year. So consistent growth, which, signals they're holding their own in a tough market.
Shows they can still attract and keep customers. And what about profit? GAAP net income.
Right. So under the standard accounting rules, GAAP net income was $0.3 billion. That works out to 0.37 per diluted share.
How does that compare?
It's actually slightly down from Q3 last year. That was also $0.3 billion, but it was a 0.39 per share then.
Interesting. So revenue's up, but GAAP income per share dipped a bit. Maybe investments or...
That's a really good question. And it leads into why companies often show non-GAAP figures too.
Right, the adjusted number.
Exactly. They pull out certain items to give, let's say, a clearer view of the core operational performance.
So what did the non-GAAP numbers look like for Palo Alto Networks in Q3?
Much stronger, actually. Non-GAAP net income was $0.6 billion, or $0.80 per diluted share.
Okay, and how does that compare year over year?
That's up quite a bit from Q3 24. Back then it was $0.5 billion, or 0.66 cents per share.
So the underlying operational profit, according to them, is growing faster. What kind of things do they exclude for non-GAAP?
Typically, it's things like share-based compensation, which is often a big one for tech firms, and costs tied to acquisitions.
Got it. So look at both GAAP and non-GAAP for the full picture.
Definitely. GAAP gives you the standardized view. Non-GAAP can offer insights into, the core business engine without those specific items. Wise to consider both.
Makes sense. Now, one term that keeps popping up everywhere is Next Generation Security ASER, NGSAR. What exactly is that, and why the focus?
Right, NGSARR. It stands for Next Generation Security Annual Recurring Revenue. Basically, think of it as the annualized value of their active subscriptions for their more modern stuff.
Like Prisma and Cortex.
Exactly. Prisma and Cortex platforms includes their virtual firewall, VM series, other cloud security services. And something new since Q1 this fiscal year, they now include Cured SaaS contracts in there too.
Ah, okay. And how's that metric doing?
It hit a really big milestone in Q3, crossed $5 billion.
Wow, $5 billion.
Yep, $5.09 billion to be precise. And that's up 34% year over year. So really strong growth.
34% growth on a $5 billion base is significant. What does crossing that $5 billion mark practically mean for them? Market influence, investment.
Well, it's a huge signal, really. Shows their shift to subscriptions is working, right? Giving them that predictable recurring revenue.
Yeah, investors love recurring revenue.
They do. And it also underlines that the market is really adopting these newer security solutions. It validates their strategy, their investments, and positions them as a leader. Plus, that revenue visibility. It lets them plan and invest in future innovation more confidently.
Okay, another metric that stood out was remaining performance obligation, RPO. What's the story there?
RPO also looking healthy. It hit $13.5 billion in Q3.
$13.5 billion.
Billion, yes. And that's up 19% year over year. RPO essentially represents the total value of services they've contracted for but haven't delivered or booked as revenue yet.
So it's like their backlog, future revenue that's already locked in.
Precisely. It's a forward-looking indicator, gives you a sense of the revenue pipeline, suggests continued financial stability down the road.
So if you put that together, strong NGS ARR growth showing current subscription success and strong RPO growth showing future contracted revenue.
Yeah, it paints a picture of a company with pretty strong momentum right now and good prospects, especially in those key strategic areas they're focused on.
Okay, so they have this strong backlog. Now, how are they trying to build on that? Let's talk about this platformization strategy. The CEO, Nikesh Arora, really emphasized it. He said, our scale and platform breadth makes us a leading consolidator of choice. What's the core idea?
Platformization in this context is really about offering a whole suite of interconnected security tools. The idea is customers can get more of what they need from Palo Alto Networks instead of, stitching together solutions from loads of different vendors.
Trying to be the one-stop shop, basically.
Kind of, yeah. The aim is a more integrated, comprehensive security setup for clients. Simpler management, potentially better overall security because things work together.
Sounds appealing. Definitely simplifies things.
Yeah.
Did they give numbers on how many customers are actually doing this? Adopting the platform?
They did mention adding about 900 net new platformizations in Q3. These are customers adopting multiple parts of their platform.
900 net new ones just in the quarter.
Yeah. They didn't give a single total number, but they highlighted growth in large customers using more of their stuff. Like, they now have 90 customers spending over $5 million a year on NGS ARR.
90 customers over $5 million AR.
Right, and that's up 41% year over year. And even bigger, 44 customers are over $10 million in NGS ARR. That's up a huge 63%.
Wow, okay, so the big customers are definitely consolidating onto their platform.
Seems that way. It suggests a growing chunk of their base is really buying into that integrated approach.
They even gave some examples, anonymized, of course, of these big platform deals in Q3. What did those show?
Yeah, those examples really bring the strategy to life. You had, like, a U.S. financial services firm taking on both XIM and NetSec. That was a $33 million deal, consolidating 4 older products.
Okay.
Another U.S. financial firm consolidating network and cloud security, $90 million deal. Also 4 products replaced.
90 million. Huge.
And a global consulting firm, they expanded their relationship by adopting XIM on top of their existing NetSec, $46 million deal, again consolidating 4-point products.
So the common thread is big deals, multiple platforms adopted, and consolidating away from other vendors.
Exactly. It shows significant customers choosing to integrate critical security functions with Palo Alto Networks. Really supports that platformization story.
So what's driving this? Why are companies seemingly more willing now to consolidate and go for these bigger platform deals?
Well, there seem to be a few major forces pushing this. First, securing all this AI transformation that's happening everywhere, it's creating really complex new security needs.
Right. AI adds another layer entirely.
Totally. Second, the threat landscape just keeps getting worse, doesn't it? You hear about things like AI-powered ransomware being like 100 times faster. That demands more coordinated advanced defenses.
Faster attacks need faster, more integrated defense. Makes sense.
Third, as the CEO mentioned, vendor consolidation itself is a trend. Companies just want simplicity. Managing dozens of security tools is a nightmare.
Yeah, I can imagine. The integration headache alone.
Exactly. And finally, there's this urgency around getting enterprise data architectures right, preparing for AI, which is making companies rethink their whole security strategy from the ground up.
It all points towards needing, more connected, more intelligent security. So let's dig into some specific products. Cortex, their security operations platform, and especially XIM, sounded like they had a really strong quarter there.
Oh, absolutely. Cortex overall had record bookings in Q3. Big reason why their NGS ARR beat expectations.
And XIM within Cortex.
XIM, that's their extended security intelligence and automation management platform. Think of it like the AI-powered brain for the security operations center, analyzing threats across everything. It saw incredible momentum, over 200% year-over-year growth in its AR.
200% growth.
Yep. They're now at about 270 XIM customers. And the average ARR per customer is over $1 million.
Over $1 million ARR per customer on average. That's substantial. What's driving that kind of uptake? Why are people adopting XIM so fast?
Well, a huge factor seems to be the results it delivers in speeding up incident response, what they call median time to resolve, or MTTR.
Right, how fast they fix things.
Exactly. So before XIM, customers were apparently taking on average 2 to 3 days to resolve incidents.
Days, wow.
Yeah. With XIM, they're reporting dramatic reductions. Some are down to around 1 minute, and about 60% of XIM customers are now under 10 minutes MTTR.
From days to minutes. Okay, that's a compelling selling point.
Absolutely. That kind of efficiency gain is a massive deal for overloaded security teams.
Yeah, no kidding. The presentation also talked about XIM for peacetime. What do they mean by that?
XIM for peacetime.
Yeah, it's about using the platform for more than just reacting to live attacks. They're adding things like email exposure monitoring, VM scanning, expanding their expanse capabilities for attack surface management.
So proactive stuff, finding problems before they get exploited.
Exactly. The idea is that the unified data lake that XIM is built on, plus its AI and automation, provides a really strong foundation for continuous monitoring, vulnerability management, identifying risks before the wartime scenario hits. Interesting. Expanding its role. Okay, let's shift gears to network security, or NetSec. Software firewalls and SASE. How's that side of the business doing?
Still doing well. Their software firewall business kept its momentum. About 70% of that software firewall ARR is now in the public cloud.
So definitely a cloud shift there.
Oh, yeah. Growth was around 20% year over year for that segment.
Wow.
And marketplace bookings for software firewalls up over 25% year over year.
Marketplace bookings, so buying through AWS, Azure, Google Cloud marketplaces.
Exactly. And what's really interesting is how this software shift is changing their overall network security revenue. Software now makes up 38% of their total product revenue over the last 12 months.
38% from what?
Up from just 22% only 2 years ago in Q3 23.
Wow, that's a rapid change. From mostly hardware to a much bigger software mix. What about SASE Secure Access Service Edge?
SASE is also growing really well, faster than the market overall, actually. They have about 6,000 active SASE customers now.
6,000. And the growth rate.
ARR growth in Q3 was 36% year over year. The market overall, they estimate, grew maybe 17% in that same period.
So they're gaining share significantly in SaaS.
Seems like it. They also saw good growth in big SaaS deals. The $1 million plus deals were up 22% year over year. And encouragingly, about 40% of their new SaaS customers were totally new to Palo Alto Networks.
40% new logos through SaaS. That's a good sign for expanding their reach.
Definitely suggests they're successfully acquiring customers specifically for their SASE offering.
They also made a point of highlighting Prisma Access Browser, PAB, called it the future OS of the AI-driven enterprise. Bit hyperbolic maybe, but what's the story there?
Yeah, they're definitely pushing PAB. It's basically their secure browser offering integrated with their SaaS platform, and it's seeing huge demand.
Oh, huge.
Around 3 million licenses sold. That's up 11 times year over year.
11x growth.
11x. And in Q3 alone, about a third of all the Prisma Access seats they sold included PAB.
Okay, so significant uptake. What's new with it? PAB 2.0.
Yeah, PAB 2.0 is focused on enabling secure use of generative AI, better access controls, and using LLMs within the browser for security functions. It really ties into their whole strategy of securing this AI-driven future.
And speaking of AI security, Prisma AIRS. That's a new announcement, right?
Brand new, yeah. Prisma AIRS stands for AI Security. It's their dedicated suite of solutions designed specifically for the security challenges that come with using AI everywhere.
So securing AI itself, not just using AI for security.
Exactly. Securing the AI models, the data they use, the applications they're part of. They're positioning this as a major new market category. They even put a number on it, estimated $15 billion total addressable market by calendar 2028.
15 billion TAM for AI security. Ambitious.
Very. And to back that up, they also announced they're acquiring a company called Protect AI.
Protect AI, what do they do?
They specialize in AI security. The goal seems to be combining Palo Alto's scale with Protect AI's tech to offer a really comprehensive platform, covering AI security from the development phase all the way through to when the AI is running live.
Okay, so what can Prisma AIRS actually do for an organization trying to secure its AI?
They broke it down into 3 main areas. Discover, finding all the AI systems, scanning models, doing AI red teaming. Then assess, figuring out the specific risks involved. And finally, protect, applying controls, preventing threats against AI, runtime security, managing the AI security posture.
Discover, assess, protect. Makes sense. It's a big strategic bet, clearly.
Absolutely. Combining their own development with this acquisition signals they want to be a leader, maybe the leader, in securing AI itself.
Okay, let's bring it back to the financials then. What do they guide for the next quarter, Q4, and the full fiscal year?
Right, the outlook. So for Q4 fiscal 25, they're expecting NGS ARR between $5.52 and $5.57 billion.
Which is what kind of growth?
That would be 31% to 32% year-over-year growth. They see RPO landing between $15.2 and $15.3 billion. That's 19% to 20% growth.
Okay, and total revenue for Q4?
Projected between $2.49 and $2.51 billion, 14% to 15% year-over-year growth, and non-GAAP EPS earnings per share between $0.87 and 89 cents.
Got it. And the full year guidance for fiscal 25?
So NGS ARR and RPO endpoints are the same as the Q4 targets. Total revenue for the full year expected between $9.117 and $9.19 billion, about 14% growth overall.
And profitability for the year?
They're guiding for a non-GAAP operating margin between 28.2% and 28.5%. Diluted non-GAAP EPS between $3.26 and $3.28. And adjusted free cash flow margin between 37.5% and 38.0%.
Did they raise that guidance at all compared to before?
Yes. Importantly, the midpoint for both full-year revenue and non-GAAP EPS was increased compared to the previous outlook.
Okay. So Q3's performance gave them enough confidence to bump up the full-year forecast. That's a positive sign.
Definitely suggests they feel good about the momentum heading into the final quarter.
Any other sort of modeling points financial folks should know about Q4 or the full year?
Yeah, they give a few specifics. Expect product revenue growth rate in Q4 to be similar to Q3. Non-GAAP tax rate around 22% for Q4 and the full year. They gave estimates for cash taxes for the year, 375 hours, $450 MR. Net interest income for Q4, 80 M, 85 hours. And diluted shares outstanding plus CapEx guidance.
Okay, useful detail for those tracking closely.
For sure.
Now, they also specifically mentioned AI, AR. How much was that, and what exactly does it include?
They highlighted about $400 million in ARR generated in Q3, specifically from their AI-powered offerings.
$400 million just in Q3.
Well, $400 million annualized recurring revenue from Q3. So that run rate, it includes revenue from Cortex XAM, which we talked about, but also their AIOps subscription and the 8M product Autonomous Digital Experience Management.
Okay, so it's a measure of the current run rate from AI-driven products. It gives a sense of the initial traction there.
Exactly. An early indicator of how those specific AI bets are paying off so far.
And one last point they made was about a shift in where their new NGS ARR is coming from. What was the observation there?
Right. They noted that in fiscal 25, a bigger slice of the net new NGS ARR is coming from what they call new market offerings.
Which includes?
Software firewalls, SASE, Cortex, their cloud security stuff. Basically, the newer platforms and services are driving more of the new growth compared to, say, upgrades on their more established advanced subscriptions.
Interesting. So the newer bets are becoming bigger growth engines relative to the older ones?
That seems to be the trend they're pointing out, yeah. Suggests those newer platforms are really gaining traction and becoming more central to their overall growth story.
Okay, so let's try and wrap this up. If you had to boil it down, what are the absolute key takeaways from Palo Alto Networks' Q3 25 results?
Well, I'd say first, strong Q3 performance overall. They beat their own guidance on key things like NGS, ARR, and revenue.
Okay, strong execution.
Second, clear continued momentum with that platformization strategy. We see it in the big deal examples and the growth in large multi-product customers.
Platformization is working.
Third, their next-gen stuff, especially XIM and SASE, is really driving growth and seems to be outperforming the market.
NGS engines firing.
Fourth, they're making serious strategic moves into AI security with Prisma AIRS and the Protect AI acquisition. It's a big future bet.
I'm investing in the next wave.
And finally, the outlook is positive. They raised full-year guidance, which signals confidence about the rest of the fiscal year. Strong underlying belief in their strategy and market position.
Yeah, it definitely paints a picture of a company firing on, well, quite a few cylinders. They keep talking about being a global AI and cybersecurity leader focused on continuous innovation, and these results seem to back that up somewhat.
I think that's fair. Their focus on the platform combined with these big bets on things like AI security certainly positions them to remain a major force, maybe even the major force, in cybersecurity going forward.
So as we finish this deep dive, maybe something for you, the listener, to think about. We're seeing this clear trend towards platform consolidation, driven partly by the complexity of things like AI. Palo Alto Networks is obviously a big player pushing this. What's the long-term game here? Will having fewer, bigger cybersecurity platforms ultimately make us all safer through better integration? Or could it potentially create new kinds of single points of failure, or maybe even stifle some innovation down the line by reducing competition? It's definitely something to watch as this AI and security landscape keeps changing so rapidly.